Well, hello, everybody. Welcome to this week's edition of Market Insights. You would think from my short sleeve shirt, wow, whoever that guy is, it must be warm. No, it just means I'm cold. It's dreary here. And trust me, I'm going to go from doing this, putting on a sweatshirt. Those of you familiar with comedian, the late, great Mitch Hedberg, he does a little skit where he says, this shirt says dry clean only, which means this shirt is dirty, right? Same kind of a deal. Short sleeve shirt. It means that guy's cold. Anyway, let's get to it. A lot of good stuff to share. Things just feel decidedly positive these days, just kind of across the board. The markets, the economy, and the data supports all of that. But anyway, if you're new, my name is Steven Sitkowski. Happy to have you with. I want you to know that what I'm doing here is not intended as investment advice, but it's just my insights on what's going on in the market and things that hopefully are usable for you. So let's move in the markets. The Nasdaq and the S&P on Friday both closed at record highs. What else could you ask for? You got to be killing it in this market. China takes aim at NVIDIA. They're going at them for their anti-monopoly rules. And I don't know, is there something more to that? Is it something politically motivated? I'm not sure. Interesting that we have all these conversations about tariffs. Now, all of a sudden, China rears its ugly head. But hey, smarter people than me know the answers to that. I don't. November CPI is forecasted to tick a little bit higher, maybe coming at 2.7. I think that announcement is on Wednesday when we go through the economic calendar for the week. I'll show that to you. You would think that would dissuade the Fed from cutting rates, but not so far. Their next rate announcement is December 18th. 10-year Treasury pretty stable at 4.184. You'd have thought that maybe with an anticipation of a little higher inflation, that rates would have gone up, but they have not, and oil prices haven't done a thing. I mean, they're kind of trading between 68 and 71. What to watch this week? Today, wholesale inventories, that's not going to move the market. Business optimism index tomorrow, not going to move the market. Wednesday, there's your CPI numbers. So we'll see how that shakes out. Thursday, initial jobless claims and inflation at the wholesale level. That's PPI numbers. And Friday, nothing that's going to be a market mover. So pretty slow news week, which is why it all fits on one page. Last week, it was 3 pages worth. Here's last week's heat map. Big winners, Tesla, Amazon, Meta. They all did great. Adobe, Oracle, Palantir had a super week. CrowdStrike, Palo Alto Networks, Walmart chugs along. 1-year heat map, still the big winner is NVIDIA, up almost 200%. Look at Walmart up 87%. I've been writing covered calls against that. Meta up 90%, been writing covered calls against that, writing covered calls against NVIDIA, writing covered calls against Microsoft and Apple. All those worked out really well. Market breadth, we like to look at how many stocks are hitting new 52-week highs versus lows. And we're in good shape. 339 new highs on the New York Stock Exchange versus 96 new lows. On the NASDAQ, better than 2-to-1, 604 new highs, 285 new lows. Last week's big winner, super microcomputer, obviously driven by the increase in Bitcoin prices. Lululemon, maybe going into the holiday shopping season, up 24%. Palantir, been on a run for a while. Hewlett Packard, there's Tesla, Broadcom, Ulta Beauty. Nice to see them getting off the mat. Estee Lauder, again, it all seems to be holiday driven. Salesforce and Amazon. So you can see a bunch of retail. Investors are just pouring cash. Look at that into equities. Why not? It's where all the money's been made. Second half of December is generally really good, other than the second half of July. Well, the first half of July, it is the best 2-week period of the year. Tax loss harvesting is underway. So this is where we utilize a strategy. There's probably some big capital gains in your portfolio, I would assume. And if you've got any losers, you sell off the losers because those capital losses can help to reduce the capital gains. So why carry the loss into next year? Sell it. You can turn around if you wait a little more than a month. You can buy them back, right? And reposition. There's this talk about we need to cut federal spending, and we do. Here's the problem. Most of the federal spending is entitlement. Medicare, Social Security. I don't really think Social Security is an entitlement, by the way. I don't think Medicare is either. And we're paying into those things. It's not like somebody's doing us a favor. Now, welfare, food stamps, those are entitlements, but they seem to lump them all together. Look at non-defense discretionary spending. It's forecasted to go down. So not sure what they're going to do about that. Consumers, look at consumer confidence. This is the Economic Optimism Index up there near the tippy top. CFOs confident. Optimism about their own company is in red, and about the economy is in blue. Both higher. Investors' sentiment relative to the stock market, check that out. So just generally speaking, individuals, investors, CFOs, everybody seems to feel pretty good about what's going on. Yet, on the fear and greed index, we're at neutral. We're at the upper part of neutral, but we're at neutral. How much will the Fed end up cutting? Well, we see 1, 2, 3 rate cuts over the next year. There is now an 89.3% probability of a cut on December the 18th. Personally, if I were the Fed, I wouldn't be cutting. I think the economic data is too strong. I'd be fearful of another round of inflation, but they probably know more than I do. And I will tell you that'll be good for the stock market. That'll be a nice little catalyst. 1-year sector return. So the S&P 500 for the year is up 32%. If you're not up 32%, you have underperformed. The big winner, communication at 44, tech at 41, financials at 39, discretionary at 39. Those all overachieved, and everything else is underachieved. Not much for industrials and utilities. But when you get down here to staples at 20%, it's underperformed the market by 12%. That's huge, right? That's like on average 1 year and 1 quarter's worth of returns. Take a look at the charts. See what is happening there. Here's a 6-month chart on the S&P 500, and it is a thing of beauty. Yellow line is 50-day moving average, which is sloping up. That's bullish. trading above that 50-day, also bullish. How about the Qs? It's NASDAQ 100 Trust. Same thing, right? All-time highs. That's what the chart's going to look like. How about that squirrely little Russell 2000? Yeah, it's kind of topped out, right? Made a move, moved higher. This is generally a proxy for the economy, the Russell 2000. And let's update on our trade ideas of the week, how those have performed this year. We have closed 103 trades as of the end of October. Average return per trade almost 18% and 16.6 days. Something to be proud of. Win percentage 93.3%. Awesome. All right. Well, listen, thanks for hanging with me once again. I will see you all back here next week. Until then, be safe, be blessed. Bye for now.